With over 25 years of experience under his belt, Andy Schectman has become a prominent figure and a trusted voice in his field. As the president and owner of Miles Franklin Precious Metals Limited, Andy has built an exceptional reputation for his deep knowledge of the precious metals industry, economics, global investing, and foreign currencies. With a track record of success and a commitment to trust, collaboration, and superior customer service, Andy has built a remarkable operation at Miles Franklin, which recently surpassed $5 billion in sales. In today's video, we'll tap into Andy's wealth of expertise as he shares insights on the recent changes in the gold and silver market. So let's dive in. Recent market developments. In a recent interview, Andy Schectman made an intriguing comparison, likening the gold market to a drive-by shooting. What he meant by this analogy was that the current fluctuations in the market seem to be driven more by speculative forces rather than physical demand. This fascinating observation challenges conventional wisdom and invites us to explore the underlying factors influencing the market. But it's not all about the speculators. The gold and silver market has witnessed a rise of new participants as more and more people are flocking towards precious metals. This surge in demand has been nothing short of dramatic, with a notable influx of individuals seeking to safeguard their wealth and hedge against economic uncertainties. This influx of new buyers brings fresh perspectives and adds an intriguing dynamic to the market landscape. As the market dynamics continue to evolve, there is a palpable sense of anticipation for further changes on the horizon. The shifts we have witnessed so far, from the surge in demand to the speculative nature of trading, have set the stage for an exciting period of transformation. Investors and experts alike are eagerly monitoring the developments, as they understand that these changes can have profound implications for their investment strategies. The anticipation of further changes stems from various factors such as global economic trends, geopolitical events, and shifting investor sentiments. It is this anticipation that keeps the gold and silver market in a state of perpetual motion, making it a captivating arena for investors looking to capitalize on emerging opportunities. Potential market challenges. One of the concerns Andy Schectman highlights is the possibility of the next government being less market-friendly. Political shifts can have a profound impact on the financial landscape, affecting investor sentiment and market regulations. With a less market-friendly administration, policies that hinder economic growth or increase market intervention may emerge, potentially impacting the gold and silver market. It's crucial to monitor these developments and adapt investment strategies accordingly. In a world of unconventional monetary policies, another challenge lies in the possibility of negative interest rates. Such a measure is intended to stimulate spending and boost economies, but it can have unintended consequences for investors. Negative rates may deter savers, driving them towards alternative assets like precious metals. Understanding strategies like Andy's The Art of War in investing becomes essential, focusing on misdirection and fundamentals rather than solely fixating on short-term price movements. Furthermore, the demand for physical delivery of metals has experienced a significant surge. Investors are increasingly seeking tangible assets and aiming to reduce counterparty risk. This shift reflects a desire to have direct ownership and control over their investments. However, this increased demand can strain the supply chain and potentially lead to logistical challenges such as delays in delivery and increased premiums. The gift for smart investors. Andy Schectman highlights that the current price smashdown in the gold and silver market is seen as a gift for smart investors who possess a deep understanding of the rigged nature of the game. These astute individuals recognize that short-term market manipulations and price suppression tactics can create artificial lows in the prices of precious metals. Rather than being discouraged by these tactics, they see them as opportunities to acquire gold and silver at more attractive prices. By capitalizing on these artificially suppressed prices, these investors position themselves for potential future gains when the true value of gold and silver is ultimately realized. In recent times, the importance of physical possession of precious metals cannot be overstated. Schectman underscores the significance of holding physical gold and silver as a means of safeguarding wealth during times of economic volatility and uncertainty. In an era marked by geopolitical tensions, inflationary pressures, and the inherent risks associated with traditional financial systems, physical possession of precious metals provide a tangible and reliable store of value. By having direct ownership of gold and silver, investors mitigate counterparty risks and ensure that their wealth is not subject to the fluctuations and vulnerabilities of paper-based assets. Government digital currency and gold. There is a growing belief among experts that we might witness the introduction of a new government digital currency backed by gold. This concept combines the convenience and efficiency of digital transactions with the intrinsic value and stability of gold. The idea behind such a currency is to leverage the trust and historical significance associated with gold, while harnessing the benefits of technological advancements. If this becomes a reality, it could have profound implications for the gold market and how individuals perceive and interact with the digital currencies. Now let's understand why the Federal Reserve might have a need for such a currency. One of the primary motivations is to generate inflation. Inflation is a key driver of economic growth, and central banks often seek ways to stimulate spending and investment. By introducing a government digital currency pegged to gold, and Federal Reserve can create a mechanism to ensure the currency retains its purchasing power over time. The stability and scarcity of gold provide a strong anchor, reducing the risk of excessive inflation while instilling confidence in the currency's value. As we witness the rapid evolution of digital currencies and observe the Federal Reserve's goals, the potential introduction of a government digital currency pegged to gold represents a significant development in the financial landscape. Enjoying this video? Give it a thumbs up and share it with your loved ones. Don't forget to subscribe and hit that notification bell to stay updated with our latest content. Now, let's jump right back in. FDIC and the banking system. One of the key aspects of the banking system that we need to consider is the Federal Deposit Insurance Corporation, or FDIC. While the FDIC provides a deposit insurance to protect customers' funds in case of bank failures, it faces some challenges. The FDIC's insurance fund is limited, and in the event of significant bank runs or multiple bank failures, it could strain the resources of the fund. This raises concerns about its ability to adequately cover the insured deposits and maintain stability in the banking system. As we navigate through these uncertain times, it's important to be aware of the potential challenges the FDIC may face and the impact it could have on the overall financial landscape. Now, let's look at the risks associated with bank failures and the need for monetary expansion. When banks fail, it can lead to a loss of confidence in the banking system, triggering a domino effect that can negatively impact the economy. To prevent a collapse, central banks often resort to monetary expansion by injecting liquidity into the system. However, this expansionary monetary policy comes with its own set of risks, including the potential for inflationary pressures. As more money is pumped into the economy, the purchasing power of each unit of currency diminishes, leading to rising prices. The role of gold and silver. Gold and silver have held a significant place throughout history as wealth-preserving assets. For centuries, they have served as a hedge against inflation, economic downturns, and political uncertainties. The enduring value and universal recognition of gold and silver make them reliable stores of wealth, sought after by individuals and institutions alike. Their historical significance reinforces the notion that owning precious metals can provide stability and protection during times of economic turbulence. In the current economic climate, silver is gaining growing relevance. As the world undergoes transformative shifts, such as the increasing adoption of renewable energy technologies and the demand for high-tech devices, silver's industrial applications have soared. The surge in demand, coupled with limited supply, positions silver as an attractive investment opportunity. While data and analysis play a crucial role in investment decisions, it is equally important to trust your instincts. In the ever-evolving gold and silver market, listening to your gut can provide valuable insights. Successful investors understand that combining research, expert advice, and gut instincts can lead to informed decision-making. Trusting your instincts allows you to navigate market fluctuations, identify emerging trends, and seize opportunities when they arise. So, as we navigate the massive changes happening in the gold and silver market, remember the importance of trust and gut instincts, alongside the wisdom shared by industry expert Andy Schectman. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.